Welcome back to Business Daily here on Trust TV. Joining me virtually from Kano State is Dr. Emmanuel Bashayi, who is a business and economic consultant. And of course, we'll be looking at our conversation later in the day, talking about managing, sustaining growth for your businesses in this beautiful, wonderful economy that we have in our country, Nigeria. But before that, let's take a look at some of our top stories this morning. The first one there about Nigeria, France signing tax administration ahead of the 1st of January 2026 reforms beginning. Doctor, what do you have to say about that?
So good to have you. Good having me again, Chiamaka. Always a pleasure. So I think racing towards January 1, 2026, everyone is putting his house in order. So I think just as the regulators and the tax authorities are doing that, it's also important that the citizens also get themselves up, get ready for 2026. I think the FIRS has been proactive in trying to ensure that they have the framework perfected to seamlessly uh, run the whole tax process and administration come January 1. I think this level of proactivity is very good. Education has also been significant to Nigerians and the citizens. I think the government has leveraged a lot of channels and opportunity to educate the public on the realities of the new tax laws. So let's see how that pans out. Typically, they say the taste of the pudding is in the eating. So let's see when that policy kicks in. We'll see what the reactions will be even more closely and more practically, and then also see how Nigerians will respond accordingly. So, give or take, I think the FRA is being proactive and is a good thing. So let's see how we can deliver the best and the most seamless service in terms of tax administration to the general public, both businesses and individuals.
Okay, let's go now to the region. ECOWAS has decided that it's time to take away some taxes, off airfares to help integration, regional integration amongst us as a people. And, away from even ECOWAS, I hear to fly to Congo, it's quite a journey. For something that's just nearby, you have to, first of all, go round and then come around. Generally, the whole aviation sector, the whole flying situation, what do you actually make of that?
So I think the key challenge with Africa is how integrated we are. In terms of size, we are not as big that we shouldn't be able to easily travel within member states. So just like you made the example of Congo, there are countries that are just next door to you in Africa, and you need to travel, connect flights, and all of that. Think about this a simple trip from, say, Lagos to Mauritius. You don't have a direct flight from Lagos to Mauritius. You have to fly to Morocco, use Air Maroc, well, Air Maroc before you connect again. Some trips that on a good day, a direct flight should take you 3-5 hours, will take you something close to 24 hours. So this doesn't in any way help our regional integration and also help with trading in the member states of Africa. So when you think about this, it becomes a very immediate concern to business integration and business expansion. Thankfully, within the West African bloc, we have a more seamless travel arrangement. At least you can have direct flights to most of the member countries, at least as much as I am aware. So how then do we leverage on that to be able to push for this frontier where we're able to, I can easily cross to the next country, do my business and work back. We have good flight networks and then a seamless connecting flight if there has to be any connection to be able to get from one country to the other. That we don't have yet in Africa. In other parts of the world, within the same continent, it's almost like moving from Lagos to Kaduna because you have a very well-connected system on the network of air travels.
Okay. All right. Thank you so much for your insights on that, those two stories. Let's now go to our conversation for the day. How are we going to manage and sustain growth in our business, in our Nigerian economy? Now, sustaining growth in Nigeria requires strategy, resilience, and adaptability. Key focus areas include financial management, operational efficiency, digital transformation, human capital development, and policy awareness. Now, policy awareness will start off, of course, with the situation coming up in January. You can see the FIRS will soon become the NRS, signing deals with France. We see the JTB, Joint Tax Board, which now is transitioning to become the Joint Revenue Board. Everybody is doing their part. Now, for the people who this is going to affect, how aware do you think that Nigerians are about this new tax reforms and even the policies about businesses in the country?
So I think today, for the most people that are aware, most of them have taken personal responsibility to see that they are able to know as much as they should about the new taxes. I know the Presidential Tax Reform Committee did a lot of work also in trying to engage with stakeholders through town hall meetings and community engagements and all. But then today, I think most of the information has basically been around personal efforts by influencers, by opinion leaders to be able to educate Nigerians on that. And I think most importantly, it's also about taking responsibility. So, for a business owner, I think it's important you take responsibility to understand what is coming ahead. You don't have to wait for someone to babysit you, to be able to tell you what it is that is coming. So you should proactively try and understand by yourself what is going to change, how is it going to be different from what it used to be, and so on and so forth. So yes, taxes are going to definitely impact on your business in terms of cash flow, in terms of your filing and what it is that you're going to report to the tax authorities and all. But in the end, you need to understand how this overall impacts on your business. And that is where the place of personal responsibility now comes in. So if you don't know, you ask questions and you also ensure that you get the right answers and you get yourself ready when the time comes. It's just a few days away, so it's not too late to ask all the questions. Unfortunately, that has already been passed into law and it's going to happen either way.
Okay, so let's look at the situational, the economic sense, or will I call it health, business-wise, in Nigeria for 2025. What could you make of it?
So 2025 was arguably a very challenging year for many businesses. Challenging in the sense that there were a lot of other factors that came to play in the overall business environment. So we were grappling with inflation, trying to tame inflation. There were economic policies, monetary policy changes. There were also a couple of fiscal policy changes that also happened. So all of this come together to impact on businesses. So you will notice that some businesses had the challenge of lower turnovers. There's less cash in circulation because government is trying to tame inflation, so there was less cash in circulation. The value of money has also been impacted, so disposable income is also significantly impacted. So in the overall picture, you will notice that most businesses sought to keep pace. If they're able to grow significantly, it's a plus. But if they are not able to grow significantly, they are happy to maintain the status quo. But then it's our hope that with the indices next year is more promising. The the numbers are more in the favor of businesses. As prices begin to come down, consumption will increase, turnover will increase for businesses and traders, and then overall we'll be able to see more revenue being generated from those businesses, especially businesses that have to do with consumables, daily consumables, like food, toiletries, household items. You're definitely going to see a deeper level of consumption to go into 2025 because we're anticipating that as inflation begins to ease out, I mean, inflation surge eases out, there will be a similar level of reduction in certain prices, and that will mean more disposable income to the average consumer.
All right. Now, you mentioned a few things: inflation, FX, volatility. Now, how can Nigerian businesses adjust their strategy to these persistent issues?
So, inflation is something that you cannot insulate anybody from. And then with the new FX policy, where it is a case of demand and supply, the market forces determine the prices and the exchange rates generally. So what is happening here is that as we begin to ramp up on local production and begin to source most of our products locally, we then rely less on foreign exchange for imports. That will reduce the pressure on the demand for FX, and if the straight line goes, it should also reduce the exchange rate value. So that is on one hand. Inflation, on the other hand, we've seen that in the last couple of months, the arbitrary increase in prices of goods and services the market has quelled a bit. You don't have the volatility that we experienced almost 2 years ago, where you go to the market in the morning, a commodity is at 2 naira, by evening it's at 5 naira. At least we've gone out of that phase of that level of volatility. Prices are more predictable now, prices are more stable, so we expect a greater level of stability. So with that in place, inflation getting under control, and then the stability that we seek in prices getting getting better, we expect that the levels of surprises will be fewer in 2026, and then business will be able to enjoy a stronger growth momentum as we go into the year.
Okay, so now what early signs should managers actually monitor to detect when economic shifts are likely to affect their operations?
It's usually going to start with patronage. There's usually going to be a dip in consumption or patronage from businesses. That's usually the first sign. And whenever that begins to happen, you begin to probe into understanding what could be the driver of those. So my customer used to buy 10 units, now he's buying 5. What is driving that? Is there an increased level of competition, or is there a lower demand for the category products generally, or is there any anticipated loss in value that customers will think are expecting could happen? So these are the things that could likely trigger a dip in demand. Seasonality also happens because in Nigeria we have seasons, so you're going to expect that different things could happen in different seasons. Like I take for example, if you're in the business of detergents, you would expect to see a lower consumption during the rainy season because people are only able to wash less, consume less of the detergents, and then you would expect to see a greater demand or a higher consumption in the dry season when you have more people washing. Washing is no longer an issue because you can wash anytime and the clothes to dry anytime. So these are factors that could impact the industry-specific trends as you may want to look at it. So there are early signs for 2025. Consumer goods, most especially, is going to see a relative surge in price. I mean, surge in demand. Prices are so far stable. We're already seeing some a doubling back of prices where companies are beginning to reduce prices due to some level of stability that's been achieved so far. So we expect to see more of that in 2025 with more prices coming down, consumers will buy more, and then the companies will have more to go and effectively more net profit.
Okay, so let's go to SMEs. What financing models are more suitable for them in this high interest environment?
So financing models today, the development bank financing will be the most ideal for SMEs. However, how easy it is to get those is it's a different conversation entirely. Commercial bank interest rates are still high. And then when you go to the microfinance routes, they are even higher up front. So the easiest financing route would be go to development finance, go through the rigor and the process, and uh, trust that the system will do the right thing and get that financing done at that level, especially because the development finance understands the peculiarity and the nuances of that industry and can better tailor their products, their banking products to suit the requirements of the business of that industry. So that would be the simplest recommendation. You need to build up your business. If there's a chance you can get a zero interest credit from any source, from family, friends, or anyone, I think you should take it by all means. But if that doesn't work, then you may want to look to the development finance banks like Bank of Agri, Bank of Industry, and so on and so forth to get that kind of financing sorted.
So how can businesses balance the need for growth and still maintain strong cash flow?
So it's businesses need to have that healthy balance. Yes, we want to grow the business, but we also want to be sure that we're able to meet our short-term, mid-term, and long-term financial obligations. Now, it's a case of balancing. It's not a case of whether you can do without one can do without the other. If you stifle the business in the needs to maintain cash flow and keep a tidy level within your books, then you are likely going to risk taking the right necessary steps or the risks necessary to expand the business. So we need to take calculated risks, take calculated and well thought through uh, risks or measures to be able to grow the business. However, we also must have a very clear eye on the cash flow and the financial discipline required to be able to run the business effectively. We always say cash is king in business. You always prefer people to pay you upfront rather than pay you later. So paying you earlier uh, is always better. So there is a model where we talk about you sell more, you spend less, you grow share, and you collect faster. So if you're able to adopt that in your business, you definitely are on the right path to growing the business and also maintaining the right level of financial discipline that keeps your business in the right position. So that's very, very critical.
Okay. Let's deviate a bit and go to something that happened a few weeks ago where the Central Bank of Nigeria, the Apex Bank, revised their cash limits. Now, before it was 5 million naira monthly for individuals and now 10 million naira for corporates. But now it's now been made 500,000 naira weekly, 100,000 naira daily at ATM max, and it still counts to your 500,000 naira weekly. What do you make of that? And how will this in any way impact the businesses in Nigeria?
So I think the CBN thought through that policy to be able to ensure that the restrictions that were available on cash deposits are lifted so that people can bring in more cash into the system. Um, However, for cash-based businesses, that's a good thing. The key thing is around when you have to withdraw cash. So now the government is trying to push everyone into more cashless transactions. So if you have cash today, sorry, you can bring, I mean, it's good. Bring your cash in as much as you have it, bring it in. We will take it because cash handling is a huge cost today. So if we take in those cash, we will now be able to regulate how much cash goes out. Remember, Nigerians are coming from an experience just a few years ago in 2022 where there was going to be a redesign of the currency, and the people took it, their money to the banks, and then it got to a point where they didn't have the old one, they didn't have the new one, they were stranded, and the electronic systems were not as robust as they should be to accommodate the level of the volume surge in business transactions. So there was a lot of problem in Nigeria. So Nigerians are coming from that point where they are apprehensive. What if I send you all the cash that I have, and then you suddenly tell me, oh, I cannot do this, I cannot do that, I can't transact my business in this way or this way, I have to go this. It's good for monitoring, it's good for government to be able to have an eye on every business transaction at all, and cash doesn't give that level of flexibility and that level of visibility for government. So government is trying to, let's have all the cash, we'll make everything more electronic, and then we can be able to easily monitor and keep a tab on whatever you do with your business. So Nigerians have the right to feel somehow about this, but then I think generally the overall value of the policy is good to reduce the amount of cash in circulation and be able to enable or try to push as many of us as possible into more electronic mix of doing transactions rather than just depending on cash at every single opportunity.
Okay, let's go to back to our conversation, operational efficiency. As a business consultant and manager, what are the first three operational areas you recommend cutting costs without compromising output?
So, cutting costs without compromising output, you first of all think about how you can optimize the already existing systems. Optimization means me getting more from the existing system rather than putting in more input to get this higher results. So, for example, if I have factory workers, just making this up, I have 5 factory workers who will produce, say, 10 cartons of a particular product in an hour. Now, if I'm going to produce, that takes it to 30 cartons. If I need to produce 40 cartons, I will need to add an additional headcount to make it 4 people. But then I want to see how much I can get to maybe 35 with the same headcount, my costs remaining the same, but then I'm going to get a little more from the existing resources that I have. Now, this is what optimization will be. How do I get these people from doing 10 to maybe 12 or 11, as the case may be, one more at a time, increasing my output? So what do I do to get them to increase that level of efficiency? Are there any modifications I need to do to the machines, or are there any motivations I need to do to the human beings to be able to get more from them? So companies need to begin to think of how they can get more from the existing resources. If there are people, how do I come up with creative ways to be able to get more? So instead of hiring more people, can I in some way motivate the existing staff that I have to give me more? So can I create like some performance band incentives? Can I create some recognition systems that enable people bringing more to the table to be able to get some recognized or get something that they ordinarily weren't getting before? So it doesn't just feel like I'm just doing my job and getting what I was supposed to get, but then there's something extra that I'm looking forward to for giving it some extra, putting some extra effort into the business. So that's what businesses should seek to do going into 2026. Optimization will be key, both of resources that are human and non-human resources, right? And then secondly, we need to better manage our cash flow patterns. Now, if companies that used to give a lot of credit because their business model supports it, they need to begin to create like a glide path or a phasing plan on how they're going to exit the credit. So we'll keep the credit, but then we'll begin to ask for a cash component. So we're doing both credit and cash, and then we keep tilting and skewing the split between credit and cash. Let the customers begin to understand that our business can thrive better when we get cash. So I'm going to give you, but I also with cash upfront commitments to be able to ensure that my cash flow begins to get sweeter, and then I'm able to get instant funds from transactions I've done rather than waiting until later, even though you can finance it or you have the bandwidth to be able to finance all the credits and all. So this will be things that businesses need to do. In this volatile economy, the less credit you give out to your business, the better for you. So businesses that their customers get to pay upfront for services and goods typically do better than those that get their payments more later, because cash flow is king. Cash flow is key in a business, and cash is king.
All right, let's come to the people that make the businesses work. I know customers are very important, but the workforce of these organizations, how would a business retain talent given the rising cost of labor and the current brain drain taking over, the Japa syndrome in the country?
So we need to understand that human resource is one of the primary resources that a business needs to survive. And people gravitate in the direction of value. When an employee feels valued and feels respected and feels appreciated, he's likely going to stay and give the best he can. Attrition is expensive, meaning when people have to resign for whatever reason, it comes to the cost, because the training, the expertise this person has, when you go through the process of hiring new people, before you train them and bring them up to speed, you spend money, and you might end up hiring someone at a higher cost than the previous incumbent on that role. So it's really best that you retain your talents as much as you can, rather than thinking you have a steady already pool of talents you can easily pull from whenever you have any shortfall in your talent pool. So human resource management is critical, where you're able to keep your team motivated, keep your employees loyal to stay for the long term. While they are staying, you're also ensuring that they're able to feel happy staying. I shouldn't feel unhappy staying because a colleague of mine left and got a better pay rise, got a better pay a difference versus what I am staying here to do. So it is that kind of balance where, as the rising costs is going, also the employer is also conscious of the fact that the bills of these employees are increasing, and there needs to be like a reflection of that in their take-home pay. Because if they need to move to another organization, chances are that they could get a 20% or 30% uplift, which if you had a plan to provide that level of commensurate uplift to the employees' remuneration, that person wouldn't consider a 30% uplift to move to another organization, as the case may be. That way, you're able to retain talent, retain knowledge, and you're also able to retain the expertise that you have invested so much money to build. So, human resource is key. Organization needs to be very careful and very, very mindful of managing this very important resource. It is only when it becomes impossible to deal with it that you will let an employee that you've invested so much money in training and building to leave. But as much as possible, businesses have to see the human beings that work with them first as humans before you see them as resources. And that's very, very critical to handle.
All right, now, what culture, still stay with human resource, what culture practices directly contribute to sustainable growth in an organization? Because, as you said, human resource is quite important, but be it client, be it the workforce, human resource is important to the growth of a business. So, what culture can an organization have to aid sustainable growth in their company?
So it's a culture where employees feel their voices are heard and that the value they bring to the table is appreciated and respected. It doesn't make sense that you hire an employee and then, instead of tapping into or mining his brain for the ideas and all the things that he's coming with, You come and you just give him very strict regime or strict routine of what he needs to do. You hired an employee, you paid for the experience that the person has gathered over the years. You've also paid for the skills and expertise that he has. Why not use it? So when you hire an employee and you begin to regimentally manage or micromanage him and all of that, it's your loss. It doesn't. It's not the employee's loss, because this person has what it takes for you to grow your business, and that was what you saw in the person in the first place before you hired the person. So for that kind of person, that comes with a lot of ideas and a lot of creativity that wants to be able to deploy all of that to your business. By the time you stifle that, you lose eventually. So employees will typically stay in places where they feel their opinions are valued, they feel that their effort is recognized, and their contribution is very, very visible to the organization. When people don't have very clear timelines, very clear work job descriptions, very clear expectations, you cannot measure the progress and the value they bring to the table that easily. So key thing is this: keep the expectations very clear for an employee. That's number one. Number two, give them room to explore their creative juice. Number three, recognize the value and the contribution they bring to the table. And number four, make them a very critical pillar of your decision-making process. Carry them along in what it is that you do that affects them. That way they feel included, they feel the level of ownership to the business, and they're able to bring their all to the game every day.
Okay, thank you so much, Doctor. Well, at this point, I want to appreciate you for the impact you have on the Business Daily program. Thank you for sharing your insights with us on the conversation, managing and sustaining the growth in businesses in Nigeria.
The pleasure is all mine, Chiamaka. It's always good to be.
And that's it for Business Daily this morning. For more of our news programs and documentaries, do want to follow our social media platforms and our YouTube live stream. My name is Chiamaka Nwafor. Same time, same place tomorrow. Bye for now.